The start to financial wealth often spurs people into real estate. If you have been considering purchasing a house, you also may be wondering whether 2020 is the right time to do so. Now, whether you are ready now or don't know if you are ready, I am going to go over a few things that will indicate, based off your own personal financial circumstances, whether or not you are ready to purchase a home or if now is the right time for you to purchase a home. In this video, you will learn the necessary tools and you will have the knowledge that you need to go out into this fast-moving market that is constantly changing rapidly, to be ahead of the game and not behind the eight ball. Remember that proper preparation does prevent poor performance. So you will learn how to, one, obtain a home loan, and two, the cost associated with purchasing a home. So let's go over those things. So when considering purchasing a home and needing financing and you are ready to go to the bank, remember that lenders are looking at three things, okay? They are looking at your credit score, they are looking at your income, and they are looking at your debt. So let's go over those three things. When it comes to credit score, unlike the beginning of the year when banks were lending to borrowers with a 580 credit score, right now, that is not happening. And it's not necessarily a bad thing, and it could be a benefit to the borrower that they have a high credit score, because we do know that the higher that your credit score is, the better rates and terms that are available to you and loan programs. So what is the credit score that you need? So today you need the minimum of 650 credit score is what they're looking for, okay? Now, the second thing is 3 trade lines. That can be anywhere from your car, your cell phone, or utility bills. But they have to be 3 trade lines that are in good standing, and they would like to see some history of at least 2 years, okay? But please note, write this down, they want at least 12 months of no missed payments. So you need 3 trade lines that you have been paying on time for the last 12 months. Now, when we talk about income, they want to see your work history. How long have you been working in this field, okay? They want to see 2 years of work history. Now, if you are just coming out of school or if you are part-time, remember they are looking for full-time employees. They want to see your work hours. They're going to ask for your W-2s and your tax returns. So be very careful that when you are purchasing a home and you're working and you are full-time, make sure that your full-time is consistent. Don't, or try to avoid going from full-time 40 hours and then the following week we go 20 hours, because they calculate that, and sometimes that does not benefit the borrower when the hours or the income has been adjusted. So keep in mind, when you are preparing your documents and you are preparing to apply for a home loan, that you have 2 years work history, that you have 2 years of your W-2s. They want to see your net, what you're deducting, and they want to see 2 years of your tax return. And they also want to see at least 30 days of bank statements and 30 days of pay stubs. And so what does that mean, bank statements? That means they want to see what is being deposited, what you're spending. They want to see all the transactions. So in a bank statement, there's typically multiple pages that goes with a bank statement. Make sure that you have all of those pages. Even if that last page is blank, it is necessary for the bank. If they see some changes, they're going to question, and then that's going to hold up the process, or it may very well put you in a position where you're required to provide more information that you may not have, can't find it, is lost, and it becomes a huge problem. So to avoid all of that, make sure you keep up with all your documents and you have them ready prior to applying for a home loan, so when it is needed, you are ready are ahead of the game. The next thing is your debt. They want to see how much are you spending compared to what you are bringing in. So be very careful when you have savings or you have extra deposits in your account. They're going to check all of that. So you know what you need to obtain a loan. Now we're going to discuss the money and the cost associated with purchasing a house. You do know that it takes money to make money. So let's talk about those monies that we need, right? So when you have gotten your pre-approval letter and you are working with your professional realtor, and you are out shopping for your dream home, and you find that home that you are looking for and you begin to write an offer, I'm going to tell you how to make your offer look more presentable, how to stand out, and how to have the advantage over the next buyer, especially in a seller's market. When you present an offer, it is important to have your pre-approval letter with you and have a earnest money deposit. Now, what is that? That's like a good faith. That's showing the seller that you are not only a serious buyer, but you got some skin in the game because you putting a deposit down. Now, generally, most agents do the normal $500, but I'm gonna tell you, if you can afford to put 1% down of the purchase price, that really does strengthen your offer. So when I'm working with a buyer, I suggest the 1%, okay? Now, once you have the deposit, you need to have down payment. If you are purchasing a home and you are a first-time home buyer, you will need 3.5% down of the purchase price. So if you are purchasing a $100,000 home, you need $3,500 as just the down payment. If you are a second-time home buyer or you are an investor, the down payment can range anywhere from 5 to 25% down of the purchase price, okay? So you need to have that money. Then we can talk about, the inspections. Now, the inspections I recommend to every buyer. I do not care, okay? It is important that you have a home inspection. Why? Because you want to know what you are purchasing. This is an asset. You want to make sure that your asset that you are purchasing is valued and is safe and sound. Does that make sense? Okay, so now that we're past that, you have your earnest money deposit, you have your down payment, you have your inspection fees. Now the next thing is the closing costs, because we're getting closer to the end to home ownership. So closing costs is associated with multiple things. You have the origination fees that are charged from the lender. You have the title fees, which is the company that will do the title search and make sure that the deed in the title is clean when they transfer it. And then you have your reserve funds. Each borrower is different, but the minimum requirements is anywhere from 2 to 3 months and even more of reserves. So if you're purchasing a home, the lender want to make sure you have at least 3 months of payment in the bank, so that if anything happens like a pandemic or a stay-home order, you are still in a position where you can afford to make payments on your asset, okay? So in the closing costs, you have the origination fees, the title fees, the reserve funds, all included. Now, there are some different ways that you can get around a little bit of all of that. What do you mean? Well, this is what I mean by how you can get around some of those fees. When you are applying for a loan, again, depending on what your credit score is and depending on the loan program that you are applying for, they may offer down payment assistance that will either assist in your down payment or completely just cover it for you. Isn't that a great thing? Also, in that closing cost, you can always negotiate in your contract with the seller to help contribute closing costs. If you're FHA, you can ask for up to 6%. If you're conventional, you can ask up to 4%. And if you are an FHA borrower, you can also ask up to 4%. Now remember, closing costs is not obligated to be paid by the sellers. So make sure you have those funds just in case in the negotiation the seller is not in a position to contribute that on your behalf. But if they are and you have the money in the bank, then you will just have extra money later on, or just to keep it safe. So these are some tips that will help you as a home buyer when you're going out and searching for that home, and when you begin the process to home ownership. It is our job as realtors to inform our borrowers, our buyers, on what it takes before, during, and after to become a homeowner. If you have any questions, feel free to call me. You can text me, you can email me, you can Facebook me. I'm on Facebook, I'm on Instagram, or you can just visit my website at tayana.daytonrealestateonline.com.